So I'm doing this video because I'm a new trader and I have made some mistakes. I had a really bad day Friday and emotion set in. I was emotionally trading. I was trying to dig myself out of a hole that was completely preventable. And basically I'm just going to go over a few things that I see that I made mistakes on. I'd like for experienced traders to reach out, see what they say. If there's new traders out there, maybe they can learn from my mistakes, and hopefully this video makes me accountable. I need more discipline. I let emotion set in, which separates basically day trading from gambling. So first off, what I see, on Friday I took 12 trades on 12 different stocks. That's entirely way too much, and I'll try and quickly go over them all, but this was my worst. So, you know, starting off, I was trading small share sizes. I was doing 500 shares just to get consistent and get accurate and try and come up with a strategy that consistently works. Friday, for whatever reason, I decided to up it to 2,000 shares. It was silly, stupid, and I took a huge loss because of it. So I just wasn't ready. My strategy wasn't consistent. Emotion completely set in, which is what everyone says you shouldn't do, but is incredibly difficult to practice that. On this trade, so this one came up on the high day momentum scanner is one of the first ones. I do trade with a tick. I don't do a minute candle. I think it gives me a better entry and exit point, but I don't know. I'll let you guys look at it and see what you think. But you can't see my entry here, but basically my entry was 157. So I entered at 157, sold at 181. So initially what happens, you get this high. So you've made a couple $100, you get this high and you want more. It's greed that comes in. It's almost an addiction. So I decided at my share size here to 1,000 shares. Now, because I trade with a tick and not a minute candle, they say to wait for the high of day and then for the first green candle after it turns red. Well, this really wasn't a great entry point in this area right here. This I did really well at. You can tell that the trading was slowing down, and I could see that it was slowing down. I was able to get out of it. I could look at time and sales. I was looking at level 2. This was a good trade early on. This is almost chasing. I can't argue with this a whole lot. I mean, had I held off a little bit more, obviously it would have done better. But if I'm looking for, this is just way too much. I mean, I guess I did okay here. I did wait for a pullback here at 277, sold at 309. There were some topping tails there that said, hey, this thing's going to sell off. If I was a better, more experienced trader and my entry point was at 157, as it climbs, I don't have to take so many trades. I will eventually learn that these pullbacks, this profit-taking pullback is common and that it's going to consistently trend higher. The only thing that scares me, and there's a couple stocks here that I can show you, is you can't tell what's going to happen past this point. See, obviously it's easy in hindsight to look back and see how the stock did well, but you don't know if it's going to keep crashing here. You don't know if it's going to keep crashing here. That's where the entry point is so critical. So the fact that I got in at 157, I've built up enough cushion that I could have taken a little bit of a loss. This is a strategy that I'm still trying to learn. Because I trade in tick, it's a lot easier to see this. If I switch it to a minute candle, it's not as easy to see. So you can't tell where it was slowing down or where even a good entry point was. Now, I will say this. On a minute candle, I obviously wouldn't have made as many trades. So I thought that I was doing better using ticks, but maybe I do need to go back to a minute candle. I don't know. It just seems like the market reacts to me better with a tick. Anyways, that's something I'm still, and I would love to hear what experienced traders have to say about it. But moving on. So I was making money, I was over $1,000. I should have stopped. But basically, what my mistake was right here, so I waited for a pullback. It obviously, actually, this one I made money on too. No, I lost money. I bought in at 335 and sold at 3. So that was not a good one. So this really, to me, this is more gambling. This isn't day trading right here because you're not following a set of rules. You're not waiting for a high. So really the next entry point would have been anything over this line right here or this red line because your strategy is, and what hundreds of other traders see, is momentum. So as soon as it breaks that momentum, that would be a good entry point to get in. Otherwise, and it's good to think like a short seller too. If this continues to trend down, then you would try and find a entry point to short the stock. But really, these were terrible entry points right here. You really should not have gotten back in this stock until you broke this red line right here. Here, let's see. This was a gamble as well. So basically I got in at 347, sold at 368. I made money on that, but I didn't follow a set of rules. I was strictly hoping because you don't know what this thing is going to do. Anything in between, basically, oh, let me find some. This one's tough to say, but let's just say this line right here. Anything in between that line and this line is a gamble. You don't know what that stock's going to do. No one can predict the future. I have a very hard time of trying to predict rather than react. I should always be reacting to the market. So at any rate, it just went downhill from here. I lost over $3,000 on this stock. I was up 1,000. So at this point, I was up 1,000. I, for whatever reason, decided to get back into this stock even though it didn't crest the high. I was strictly, purely emotional trading. I wasn't following a set of rules. So it just went downhill from here. So this was not a great entry point. Obviously, it sold off, and it continued to sell off. And to be honest with you, I need to learn more. I need to learn better at how short sellers think, because if I was a short seller, I would have waited for this high of day right here and see the sell-off. This is where you have to think like a short seller, because it started selling off, and had I seen that it was setting lower lows, I should have left this stock alone. I'm too new to try and take chances with this stock. And I would have noticed a trend change, and I would have tried to short this stock. What I've seen historically, and I tried to fix it right here, I have seen where these things will have a huge sell-off and then continue to gain growth to newer highs later on. Well, again, you're predicting rather than reacting. That's exactly what I was doing here. This is pure emotion. It was catastrophic, really. What I was doing here, this was just pure silliness. I mean, it just didn't make any sense whatsoever, and it just got worse as the day went on. I mean, I had no strategy, no plan. This was gambling rather than day trading. And then when I look at the next one, the next trade I made was BOCE. So basically I had a $3,000 hole, and I'm trying to get myself out of it. So this is another where basically you have no idea what's happening. I got in at close to the high of day, which was chasing. I shouldn't have gotten into this stock, so I got in at the high, and it quickly started selling off. See, it could have been like SGYP, where it continued to go higher, but you have no idea what this stock is going to do. So I was chasing. I should have waited for a pullback. Had I waited for a pullback, I would have seen a trend set up, and then that would have given me a better entry point. So, you know, this was a good lesson learned. I should not have entered that trade. I was purely chasing on that stock. I'll continue with another video.